Many of us are wary of technological advances and what this can mean for us in the future, and if perhaps one day we'll all have super intelligent overlords. However, until we get overthrown by Skynet, we can make use of all the amazing things that technology brings. For example, this video I'm recording right now, and amazing things in finance. I'm of course talking about robo-advisors and the groundbreaking difference they're making for personal finance. Hello, my name is EvolveHumans, and if you're new to the channel, I talk about finance, real estate, business, and general money topics from all around the world. Robo-advisors are digital platforms that provide automated, algorithm-driven financial planning for any individuals with hardly any human supervision. They're basically robots giving you advice about how to invest. A typical robo-advisor starts by helping a client out by taking their financial profile, what their investing habits are, and giving them a quick questionnaire online about how they want to invest, and making an investment profile that adapts to the person. This is all an online process. No humans invited. They then use this data to offer advice, financial advice, not relationship advice. That's another thing. And they make a plan with you about how to automatically invest your assets. Robo-advisors use many strategies to invest, but their main strategy is optimizing and automating passive index fund investing using mean variance equations and algorithms. What this means, they usually take total market caps and indexes and invest in a lot of stocks at the same time that can track a total market, for example, the S&P 500. They'll take an index and invest in the 500 top countries in the US at the time, and using the variance that they suffer over time, which means the average ups and downs over time, and investing it automatically every single month or year or whatever your financial plan will be. And this keeps costs way down because of the automated strategy. They also have the added benefit of not needing to have a huge net worth to benefit from these advisor services. This is contrary to human advisors. Some of them require you have over $100,000 in your account in order to qualify for the services. You can hire an advisor starting from $5,000 net worth all the way down to zero, depending on which one. So this means nearly everyone can have a robo-advisor if they choose. The first robo-advisor ever was named Betterment. It started over in 2008 and started taking investor money in 2010. Their initial main goal was to help advise target date funds, which means funds that will expire at the end of a fixed time period. For example, if you want to go to school and you have 5 years to save for going to school, at the end of 5 years, you should have your total amount. And they would help you automate your investments so you get the most money in this time. Or if your son went to college, or if you need to buy a house, you get the gist of the story. You have a target date you need an X amount of money for. The robot will advise you as to how is the best way to get this X amount of money, and will expire at the end of this time. Now, the technology itself was nothing really new. The human wealth managers and advisors had been using this technology since the 2000s, and it only became public by Betterment in 2008. They would use their own little robots to give you advice. And once this professional wall was broken down, you could get direct access to their advisors. You wouldn't have to ring them up and wait for them to buy and sell a stock for you. Hello? Mr. Smith?
Yes, Mr. Demetrio, how can I help you?
I'd like to buy some Apple stock. I saw it as a really good price. Could you buy some for me?
Really think that's a good idea? Let me talk to the boss here.
No, it's fine. I've analyzed it a bit. You recommend I buy it? It's fine.
Okay, we think we can do it. Let me try and buy one for you today. I'll get back to you in a week.
No, but I really need it today. Would you?
That will be all. Bye.
But with a robo-advisor, you get all this advice instantly. And as soon as you ask them to execute a trade, it will be done. Usually asset management from robo-advisor revolves around index market and modern portfolio theory. So this takes your portfolio and bases it on risk management and huge market indexes. So it will invest in the 500 largest companies in the United States for you all at once, which makes your risk low because you have total market risk. So basically for you to go under, the entire United States would have to go bankrupt, and then everyone has much bigger problems than their robo-advisor giving them bad advice. And they'll automate your investment to invest every week, every month, or every year, depending on how much you want to invest. And they'll invest cheaply for you because they'll take a huge lump sum and get all their other clients and invest it all in one go and get better deals. That's automated investment at its finest. After more than a decade of development, robo-advisors can offer a lot more financial services. For example, tax harvesting, they can offer stock picking, and they can even offer you retirement planning. So they'll give you advice all the way until you retire, and they'll help you get to your main goal for retirement, so they can get you out of the workforce and make room for the robots. The industry has experienced explosive growth as a result of this facility of use. By 2015, $60 billion of assets were managed by robo-advisors. By 2020, it was predicted that we would reach $2 trillion worldwide managed by robo-advisors, and by 2025, the predicted outcome is $7 trillion. The main target audience for these robo-advisors was initially the millennials and Generation X and Y, who were more internet savvy, and they have a higher tolerance to spending money online and giving their data over online, having more online trust than the traditional baby boomers or the older generation. And most of their ads and propaganda was through social media, of course, because these youngins do love their social media. However, some of them are becoming mainstream and filtering through to some older folk and some high net worth individuals that traditionally use human advisors. Recent research by Hearts and Wells found that half of investors aged 53 to 64 use digital resources to manage their wealth, and 1/3 of retirees also use digital resources. That's a much greater percentage than, say, 10 years ago. I've been talking about costs for robo-advisors, but how much do they actually cost? What are the fees? They're usually between 0.25 and 0.5% of your total assets being managed. Human advisors would usually charge 4 to 8 times that amount, 1 to 2% of the total assets managed. What are the guarantees of a robo-advisor? Isn't this just a random program that someone can configure? What if anyone can make a robo-advisor and give you bad advice? Someone can make a robo-advisor that's a bad robo-advisor, Robo-Skynet, and take over your bank account and burn all of your hard-earned dollars. Now, to prevent this from happening, the robots have to be registered under the same rules as human advisors, namely the US Security and Exchange Commission, so they are liable to any malpractice. Their official designation is Registered Investment Advisor, or RIA for short. So if you want, you can call your robot Maria. Now, assets managed by robo-advisors are typically not insured by the FDIC, as they are not technically bank deposits. They are held for investment purposes. So you don't get that benefit that if a bank goes bankrupt, you're insured up to a certain amount. However, many providers of robo-advisors offer you additional services based on how much you have invested. A famous example of these is Wealthfront. They're one of the original robo-advisors too. They came a little bit after Betterment. And they offer some services depending on how much you have invested that can secure you if somehow they go bankrupt. This means you're generally protected from any insane bankruptcies. And finally, why is it worth it for the robots, apart from world domination? They earn fees based on how many people they have invested. Since they charge a 0.25 to 0.5% fee of the total amount invested annually, they take a quantity over quality approach. In other words, they take a larger amount of low net worth individuals over a few high net worth individuals. And it turns out to be the same, maybe even more. They also charge lower fees to trade because they take huge lump sums of all their clients and trade at 1 or 2 points during the day where the prices are lowest and they can get better deals. Sometimes they trade with other robots to make the best deals, and so instantaneously that a human advisor could never accompany or trade at the same rate. And that's why the fees are lower, because they can save more money through trading. They take lump sum trading amounts. And that's how the robots make money. Robots gotta eat. Robots gotta feed his family. If you like learning about robots and robots' world domination, particularly robo-advisors and how they'll take over the world, throw me over a like and subscribe to my channel if you like my content. This really helps to keep me going, and leave a comment down below so I can know how many of you are using robo-advisors, or if you have any additional questions about the topic. That'll be all. See ya!